starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostic, Caroline Hyde, Taylor Riggs counting you down to the closing bell. And it'll help take us beyond the bell. It's our global simulcast with Carol Massar and Tim Stenovic. We welcome our audiences across all of our platforms, Bloomberg Television, radio, as well as on YouTube and Quick Take. And Carol, an interesting day here where we came out of the gate. It looked like we had a rally on our hands, but it looks like some of that might have been a little bit distorted by some of the activity in the options market and folks just kind of trying to pick up a few short-term trades.
Yeah, there's certainly not a lot of enthusiasm, or at least a bullish tone, not at all at this point with just a few minutes left in today's trade. However, if you are in the energy sector, once again, continues to be an outperformance. We saw a kick up when it comes to WTI crude futures up more than 2%, and you saw that certainly play out in the equity trade. Again, Tim, it goes back to some of that speculation of a Chinese economy reopening, but keep in mind you've got ministers and oil global giants meeting in Abu Dhabi this week, so we're watching for some of the headlines out of there.
We just had a great conversation with Amanda Agati, the Chief Investment Officer at PNC Asset Management Group. She said she doesn't think it's going to happen, but she's already thinking about her Christmas wish list. She wants a December Fed pause from Santa Claus.
One day after Halloween,
one more trick or treat and one more Christmas analogy, Tim. I'm going to boot you.
Did you not
all
dress
the way
up?
back
You did
to
not
Cali.
dress. You did not dress up.
What did you dress up as?
I was Cookie Monster. Thank you for asking.
I saw some real live Care Bears out on the street yesterday. It was
what's
cute.
old is new again. It's like industrials versus growth. We're all going back to the good old 80s and 90s. But I mean, it is notable that we're talking real macro today, but we are still waiting for the micro, for the nuances coming from some of those CEOs after the bat.
Yeah, we're going to get a few of them in just a second. Meanwhile, let's walk you through the closing bells. Before that deluge comes, the Dow Jones Industrial Average lower on the day, roughly about 80 points or so as we wait for these numbers to settle. That's going to be good for a loss of about 2 to 3/10%. The S&P 500 lower by about 16 points or 0.4%, while the NASDAQ Composite going to finish lower by 0.9%. One of the few bright spots today, and really for the last few days, has been what we've been seeing in the small and mid-cap space. The Russell 2000 higher on the day by 0.2%. S&P 400 mid-caps higher by 0.4%.
All right, quick in terms of the S&P 500, kind of an even split here, guys. 281 names higher on the session, 220 lower, Taylor, and 2 unchanged, so kind of right down the middle, almost.
Interesting, though, today you actually have green in the best performers and red in the worst performers. In the green, it's banks and energies and some of those durables that continue to be the outperformers on the day. And then, of course, we go down to the bottom of the screen, and this is continuing to be the story. It's software and services, technology, hardware, media, and entertainment. Those are the worst performers on the day. You're off about 1 to even 2.5% or so.
All right, let's get to some of the individual gainers, if I may. Uber, certainly a standout. It was up about 12%. That's after that third quarter revenue beat, strong ridership. Wynn Resorts, also a standout, continuing to move higher over the last 3 days, gaining another 6% today. Tillman Fertitta, of course, the stake yesterday. You've got also any of these gambling companies with exposure to Macau. There's continued optimism, Romaine, as you know, when it comes to the
and I just want to point out quick, I mean, since you're mentioning Wynn Resorts, the Caesars actually crossing the wire. A nice little beat here, at least on the top line number. We haven't actually dug into the release, but it gives some sense here that some of those companies in that travel and discretionary space are holding up pretty good.
All right, well, we're rating many companies reporting. I do want to go through some of the decliners that we hear. Amazon shares are down today by more than 5%. The company, now we're actually seeing the company down for 5 days in a row. It actually closed below $1 trillion in value. Apple shares are also taking a hit, down 1.8%, down about 3% in change since Friday's close after it reported earnings. And we saw shares move higher. And Catalent falling 24.6%. I do want to jump in and talk about Electronic Arts, EA. We're seeing shares move in the after hours. They fell initially, but are now just about flat. The company says that it sees fiscal year net bookings coming between $7.65 billion to $7.85 billion. That is really light. The company saw $7.9 billion to $8.1 billion. The company does, though, maintain its quarterly dividend at 19 cents per share. The company net bookings for trailing 12 months was at $7.38 billion.
Wonder how much of an FX impact there is in Electronic Arts. Let's have a quick look at what the FX space meant for today. I'm not sure if I'm bathed in that much light. We're going to there we are. We're looking at the moment at what a pretty relatively strong yen and a strength in the New Zealand dollar. This on the back of hopes and prayers and rumours around the fact that maybe China will be more of a reopening story post-COVID. At the moment, we are still seeing a weaker dollar index. Notable, though, that we came off of those lows as we looked and digested that JOLTS data and the fact that there's still so much strength in the labor data here in the US that the Federal Reserve isn't going to be able to take its foot off the brakes as soon as we anticipated. Commodities, we saw gas markets fall in Europe, warmer weather, similar echoes here in the US, off by 8% for natural gas. Brent crude, WTI lifted higher on those rumours that China could be more of a focus on growth, more of a focus on reopening. But remember, they are rumours, not facts. And looking at sovereign bonds, which saw the 30-year yield push up in Japan, for example. But we saw really a mixed picture. Gilts, for example, being bought on the 5-year over in the UK, Taylor.
Yeah, it was really a mixed picture here within the U.S. as well. Remember, we started the day with yields lower all the way across the board, and that picture changed about midday. The 2-year and the 5-year yields are rising. You're now up to about a 454 on the 2-year, up 6 basis points on the day. But buying bonds yields lower on the long end remain, and maybe that hints of that lower growth, lower inflation on the horizon. But the key focus, again, continues to be the front end of that yield curve with the big focus on the Fed tomorrow.
Yeah, and you talk about stocks kind of in that holding pattern as maybe they will potentially get a little bit of a signal as to whether we get a slowdown in some of the pace and the severity of these rate hikes starting in December and going forward. I do want to just circle back real quick to Tim, to something you were bringing up in Amazon and this 5-day stretch. I was just taking a look. That's a 20% drop over the last 5 days here, just in that stock alone. Of course, it's always been well off the highs that I think it hit back in July of last year. But first of all, that's the biggest 5-day decline that we've seen for the stock going back to 2008. But also coming out of that $1 trillion club, we talked a lot about that, I think, on Friday here, but how we're seeing more and more of these companies sort of whittled off from sort of those really sort of massive market caps, and it really just leaves what Apple and Microsoft and Saudi Aramco.
Well, and you do think about, again, continuing to see kind of as we come out of the pandemic, some of these companies that just were on fire. You know, I'm thinking about Clorox. We're waiting for the earnings to come after the closing bell. I mean, everybody was buying disinfectant, and they just kind of took off in a big way. But we've certainly seen.
I still am, by the way.
Well, I'm
I was on the plane
like
the other day,
Jared's.
and I think I was the only person wearing a mask. So I
Did
guess
you?
I'm the idiot. So.
But would you? I mean, but in all seriousness, did you clean the surface around you? And you did. Okay,
so
good. But that's what's so different about where we are. 2 years later, Caroline, in the pandemic. But go back to what Romaine was saying about Amazon. If we think about what happened last week and the concerns about the company has about the current quarter and the consumer, that's a serious issue for the company.
Let's look at some of the earnings from what were darlings or beaten up during COVID and then came back to be darlings. We've got Airbnb seeing fourth quarter revenue at 1.8 billion to 1.88 billion. That's basically where the market had been looking for. 1.86 billion had been where the market was. We're seeing the forecast for just higher than that. But we're seeing a third quarter earnings per share come in higher than expected, $1.79. The market wanted $1.53. They're seeing gross bookings value at $15.6 billion. Again, that's a beat. The third quarter revenue at $2.88 billion, basically in line. Nights and experiences booked $99.7 million. Though that is just shy of expectations. So maybe that dialing back of the actual nights that were booked in the third quarter, a little bit of a concern there. We want to dig into some of the commentary in the business as to whether they are seeing a slowdown in the consumer and also, of course, an erosion in market share as we see inventory come back online from hotels and some of the other competitors.
Let's take a look at shares of Mondelez as well, because we're getting those quarterly results, and frankly, they look better than expected. You're looking at third quarter net revenue from Mondelez, $7.76 billion. Estimates had been for $7.4 billion, and adjusted gross margin, 37.4. Estimates had been 36.9, and that means an improvement all the way down at the bottom, 74 cents versus 69 cents. Romaine, we go through the press release, and they talk about resilience within the snacking category. A huge strength within their brands.
Yeah.
Stop eating all of my
resilience in the snacking
Your vegan
category.
Oreo.
Right. I don't think Snacky is ever going to go out of style. Of course, Oreo is never going to go out of style either here. It'll be interesting to see how resilient some of those names are. I'm a little surprised, though, and I want to go back to Airbnb, Caroline, because I'm a little surprised that we didn't actually see a little bit more strength in some of those booking numbers and revenue numbers, because that really was the bright spot. It was not only just people traveling, but, of course, we have a lot of anecdotal evidence that a lot of the sort of, if you will, are we allowed to say it, the work-from-home people were sort of, renting out these Airbnbs and whatever sort of desired location, and that was actually a big driver of some of those bookings as well.
And that's
sometimes,
go ahead, Caroline.
But sometimes we get so caught up with whether they meet or beat. It is notable that Airbnb did post its most profitable quarter to date. It did just have record revenue. overall. It's just whether or not it's at the extent that the market wanted to see and the forward-looking expectations.
But a slowdown, though, too. I mean, when we talk about the guidance going forward, I mean, now you have to start talking about a high-growth company to maybe a slightly less high-growth company.
I want to jump in because Taylor used the word resilience when talking about Mondelez's results. Resilience also a word that EA is using when it comes to their own business. The company's saying that our resilient business model, disciplined execution, and healthy underlying fundamentals are poised to deliver long-term growth. When we go back at the end of the quarter and look at the words that that these companies used in press releases, I wonder how many times they're going to use the word resilience in the context of the economy.
Is Electronic Arts is that resilient? I mean,
I don't know.
Chips
I think
Ahoy are resilient.
some
Oreos
analysts going
are
into this were
resilient.
concerned about
I don't know. I don't know what the
in-game
vegan version of that.
purchases
Honey
declining.
Maid. How about that? You can eat those, Drew. Can't you?
Oreos are vegan.
Philadelphia cream cheese. That's resilient. Ritz crackers. Sour Patch Kids.
Did you have lunch?
Sour? No.
No.
I'm not getting hungry looking through these brands here.
Mondelez,
Look at
by
this
the way.
Toblerone. Remember those Toblerones? Oh my gosh, I used to love those.
we had those here.
You were just on an aeroplane, Romaine. You should have brought us
Yeah.
all back Toblerone.
I did. I bought you back Seeds
All right, that's
candy.
a wrap.
That's regional.
Are you done, Mermaid?
No,
All right.
but I think we have to go.
Yeah, I think we do. All right, that's a wrap. Our cross-platform coverage on Bloomberg Radio, TV, YouTube, and of course on Bloomberg Quick Take. We call it Beyond the Bell. We will see you again, same time, same place tomorrow.
You're listening to Bloomberg Business Week with Carol Messer and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.